the game is not to lose your tokens and not to do stupid stuff and not make money. I don't want people coming to complain they debased our currency and we didn't make money from it. We got poorer. No, you've got the opportunity. Take it. But making money is not easy, and making money requires work. And it requires work to get an understanding. It's probably why you're watching this now. But also, I do believe that you learn by being surrounded by smart people.
Wait a minute, everyone. Welcome to BitcoinZella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. BitcoinZella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with BitcoinZella. Subscribe now. In this video, Raoul will share his views on how not to lose your tokens. Is it a life raft out of currency debasement and a new financial system being built? Could this cycle end up at 10 trillion on its way to 100 trillion, 200 trillion? How are central banks debasing currency? Technology a mega trend, what's beyond in crypto? How has it forced asset prices to rise, and what's its impact on your income? Also, he will talk about the fastest growing technology and asset class. Let's join Raoul Pal in a conversation about these topics and more.
Crypto, and I've talked about this from every angle to try and get people to understand, is a life raft out of debasement. It's a new financial system being built. It's an entire network of the internet of value that we get to own a fractionalized share of, whichever country we're in. It's the same globally homogenous product. Everywhere in the world, we all have an equal chance of putting 10% of our paycheck in this massively fast-growing asset. It's the fastest-growing fastest-growing asset class of all time in terms of number of people using it. It's the second fastest-growing technology in history, only just being bettered by AI recently. But beyond that, it's faster than the internet. And it's like owning a share of the internet. That's the magnitude of what it is. It's currently a $2 trillion, $2.7 trillion market. I think this cycle it ends up at 10 trillion on its way to 100 trillion, 200 trillion. That is a big fucking mega trend. With the debasement of currency, the adoption of a new system, and the fact that it's a life raft from the old system, that creates this supermassive black hole that sucks in capital. And it outperforms everything. It's the biggest macro trend and bet of all time, which is why I dedicate so much of my time to it. And on a risk-adjusted basis, it outperforms every asset. It's like an alien asset class. There's just literally nothing we've ever had before has had this performance with this little risk, even though it goes up and down. It's like 70 or 80% on the downside and then up, 10x on the upside. Still, on a risk-adjusted basis, it's the best risk-adjusted asset in the world. I mean, Urian Timmer from Fidelity produced an amazing chart which shows all of the risk-adjusted assets and then Bitcoin, the top right, like it completely doesn't exist in the same framework as anything else.
The next Bitcoin halving is nearing, with less than 2,900 blocks left before it happens between April 18 and April 22, 2024, at block 840,000. Here's a simple guide to the upcoming fourth Bitcoin halving. Bitcoin mining is a process where transactions are validated in a competition called Proof of Work (POW). Miners who successfully discover blocks are rewarded with new Bitcoins, currently at 6.25 Bitcoins per block. But every 210,000 blocks, or about every 4 years, this reward is halved, a process known as halving, to control Bitcoin's supply. The fourth halving is expected around April 20, or as early as April 17, where miners' rewards will drop from 6.25 to 3.125 Bitcoins per block. This big cut in daily earnings affects miners' profits and can impact the network's hash rate. The halving, as described in the Bitcoin white paper, slows down Bitcoin's issuance, similar to gold mining.
The idea that the central banks are understanding that we've hit the debt limit globally from all the major governments, and their main job is to do one thing, and that's debase currency over time. It's called financial repression. And the idea is you debase currency so the value of your debt goes down. And also the value of assets optically rises, so the collateral, which is that base layer to any lending economy is protected. Because if you lose the collateral that happened in the housing market in 2008, what happens is the whole house of cards comes down. So there's one game in town, and that's the Fed, the BOJ in Japan, the PBOC in China, the European Central Bank, the Bank of England, the Bank of Canada. Everyone's doing the same thing. And the aging populations exacerbate this because that has all the savings pools, so they can't let those people go bust either. That debasement has optically forced asset prices to rise. So what's really interesting, and again, I've talked about this at length before, is if you divide the S&P 500 by the Fed balance sheet or the GMI Global Liquidity Index, what you find is the S&P 500 has gone nowhere since 2008. And nor has gold, nor has real estate, nor have global equities. I mean, basically all assets have gone nowhere. And that's the world we all kind of feel like we're living in. Yet we see these equity markets rising. And we're like, well, my income's not rising. How the hell's this going on? My business isn't booming. Sure, some businesses are booming, but most aren't. And that's the magic of debasement. It kind of is a wealth tax on you and you don't really realize it. So your wages don't rise, cost of asset keep going up. Within that whole process of understanding the everything code, I did divide pretty much every major asset in the world. I was using gold and copper, everything, just like what outperforms the Fed balance sheet. Where do you put wealth? Now, most of these equities, S&P 500, for example, basically holds its value. So you're not getting worse off for that, but they're going up more than your wages, so you can afford less of them. So that doesn't help your future self because an asset is just future deferred consumption. But when I looked at the NASDAQ, it was like a straight line up versus the balance sheets. And it was outperforming debasement. And that got me down the route of the exponential age, understanding that technology is a mega secular trend. But beyond that is the ludicrous trend of crypto.
BlackRock's Spot Bitcoin Exchange Traded Fund, ETF, the iShares Bitcoin Trust, IBIT, has significantly increased its Bitcoin holdings, which have now surpassed 252,011 BTC, representing an approximate notional value of $18 billion. This substantial increase reflects a stronger than anticipated influx of retail investor demand, exceeding even the CEO's initial expectations. Consensus has told the U.S. Securities and Exchange Commission that Ethereum's proof-of-stake implementation meets and even exceeds the security of Bitcoin's proof-of-work, POW. The blockchain software company said the Commission should recognize the advanced safeguards inherent in Ethereum's design, which exceed the security and resilience safeguards underlying Bitcoin-based exchange-traded products. This month, we have witnessed a continuous expansion in the stablecoin domain, eclipsing the $150 billion mark on March 20, 2024, with an infusion of an additional $1.4 billion into the arena since then. Leading the pack in supply growth for March was Ethereum's USDE, soaring by 194.9% over the last 30 days. Ether, ETH, Ethereum's cryptocurrency, has seen a 3.5% increase today, reaching over $3,630. This is an 18.75% rise from its recent low of about $3,050. Here are the key reasons for this rise. Ether's strong performance against the US dollar and Bitcoin is attracting investors. The ETH/BTC pair has risen about 2.5% today, hinting at a possible shift of capital to Ethereum. Also, Ethereum's dominance index, ETHD, has grown by 2.16% since its recent low on March 29. Showing more capital moving into Ether from other altcoins. Ethereum whales or entities holding between 1,000 and 10,000 ETH have been buying more Ether. Their reserves have grown by about 1.15% in March. This buying pattern among large investors often comes before significant price increases, adding to Ether's current upward trend. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.